Do you dread looking at your bank statement? Because you regret taking out that 6.7% mortgage and now you're wondering, is there a way to lower my mortgage payments? Well, you're not alone in this. Welcome back to ToolScroll. Today, we're going to dig into the world of mortgage refinancing together. I'm going to spill the beans on how refinancing can save you some serious cash and make your mortgage journey a breeze. But also, you need to hold your horses, because there's a cautionary tale to be told about the risks of refinancing. It's important to tread carefully and consider the potential drawbacks. So stick around and let's get down to business. All right, let's cut to the chase. Why should you even consider refinancing your mortgage? Well, there are a bunch of good reasons. First off, we're talking about lower interest rates. Imagine you bought a house a few years ago with a 5% interest rate on your mortgage. Now, the market shows rates have dropped to 3%. If you refinance at the lower rate, here's what happens. Let's say you have 20 years left on your mortgage. By refinancing, you could save thousands in interest over those 20 years. It's like having extra cash for vacations or home improvements. Oh yeah, who wouldn't want that? Next up, let's talk about changing the loan term. Picture this, going from a 30-year mortgage to a speedy 15-year one. It might sound a bit wild, but trust me, it can actually slash your overall interest costs and help you pay off that mortgage in record time. It's like giving your mortgage payoff journey a turbo boost. And hey, if your financial situation is looking up, this option is definitely worth considering. Now, let's get fancy with the cash-out refinance. Let's say you've been living in your home for a while, and you've built up some equity. Equity is the difference between what your home is worth and what you owe on your mortgage. With a cash-out refinance, you can tap into your home's equity and get a larger mortgage than what you owe. Let's say your home is worth $300,000 and you owe $200,000. By refinancing for $250,000, you'd get $50,000 in cash. Use it for home renovations, debt consolidation, or unexpected expenses. It's like your home giving you a well-deserved bonus. Oh, here's a juicy one. How about switching from an adjustable rate mortgage to a fixed rate mortgage? If you're all about stability in your life, refinancing to a fixed rate mortgage can be a game changer. No more fretting over those unpredictable interest rate surprises. Smooth sailing, my friend, smooth sailing. Last but not least, let's talk about ditching that cosigner. Life changes, right? If your financial situation has improved since you took out the mortgage, you might not need that cosigner anymore. Refinancing gives you the chance to say farewell to them and stand tall on your own 2 feet. Now hold your horses for a sec. Here's a word of caution. While refinancing can lower your monthly payments, it doesn't automatically mean you'll pay less interest overall. Picture this scenario. You refinance from a 5% mortgage with 26 years left to a shiny new 4% mortgage, but this time for 30 years instead of 26. Well, brace yourself, because you could end up forking out an extra $13,000 in interest over time. Ouch. So, before you take the plunge into refinancing, let's be smart about it. Take advantage of mortgage calculators to see the potential savings. And don't forget to consider how long you plan to stay in your humble abode. See, there are closing costs involved, usually around 2% to 5% of the loan amount. You'll need to hang tight long enough to recoup those costs and truly enjoy the benefits of that lower interest rate. All right, here's a friendly reminder for you. Always shop around and compare mortgage rates before making any final decisions. You never know what kind of amazing deals you might stumble upon. And hey, don't forget to give ToolScroll's mortgage calculator a whirl. Happy refinancing, folks, and catch you on the flip side.